Hello there, this is John Sluice with Entrust CPA, coming to you here at the end of December here with a couple last minute items here to make sure that you've got in place before the end of the year. Join us for the rest of this video as we go into some of those details. Well, we've been talking to you over the last several months of all of the different tax planning opportunities that are out there. Some we've gone into extreme detail, others we've kept at a high level. But many of these items that we've been talking about here, we really got to act on. We got to do things. We've got to actually make the plan and take the plan that we've been talking about and actually put it into fruition. Some of those items we can do after year end, so in 2022 we've got such as like contributing to a traditional IRA, a couple other things we can go backwards on. But many have to be done yet this year before the end of the calendar year, so December 31. So it is sitting here, we've got a few more weeks to go, but don't forget we've got Christmas in here, plus New Year's and a few other items. And so if you're thinking of doing some of these items, give yourself some time and make sure that you have the ability to actually follow through on some of the tax planning items that we've been talking about. One of them, and this is probably the one that gets most talked about and utilized, and it is the easiest, if you will, is tax planning through contributions to a deferred retirement account. Maybe your SIMPLE IRA or your 401k. So some of those you can do after year end, going into a traditional IRA. But anything that you do through your employer as an employee has to go in as a wage. So if you've got a 401k through your employer, it's got to be adjusted in your paycheck. You can't do that after year end. You have to do it in your paycheck. So make sure you take the time to talk to your HR department and get that taken care of and pushed through yet this year. You can make adjustments with them. Go talk to them. Make sure that they know that you want to do this. And if you have to make some adjustment, that's okay. Do it. Same thing within those comes in the FSAs or flexible spending accounts. Or some of your dependent care. If you have some of those benefits, make sure that you get those in. Likewise, with your FSA and your dependent care, make sure you spend them, right? That's one of the benefits of an HSA is that you don't have to spend it, but at FSA you do. So if you use one of the FSAs in your employer, make sure you spend it before the end of the year. Next topic that I want to talk about here is converting your IRA. So we've been talking about this a fair amount. You've probably heard a lot of media on it. If we've been tax planning on this throughout the year, make sure that you get that taken care of by the end of the year. This is certainly something that you don't want to just go randomly do. You want to have thought about it. So if you haven't done a tax plan on it, make sure you give us a call to talk through on it. But if you have decided to do a Roth conversion, make sure you do that. It has to be done by the end of the year for it to count for 2021. Again, that's not something that you can wait till next year. So if you've planned on doing a Roth conversion, now is the time to get that in place. And don't wait until December 31st to do that, because your financial advisor needs time to make sure to actually do that. Next item is charitable contributions. We've actually spent several videos talking about different ways to do those, whether you're going to contribute to appreciated stock, whether you're going to be utilizing the community foundation or just the regular writing a check. But those donations have to occur yet this year before December 31st. Make sure you get that taken care of. It's an easy thing to do, and especially here we want to take advantage of that $600. If you do use the standard deduction, that $600 or 300 individuals, 600 for a married couple, that's there. That's use that. Make sure you keep those receipts and have that in place. That has to be done before the end of the year. So the next topic is required minimum distributions or RMDs. Most often you've done this already early in the year, maybe January, February, March. That's typically when people take them out. But if you have not done that yet, make sure you do it. If you are subject to an RMD or a required minimum distribution and you haven't done it, there are big penalties that if you don't take those out. So make sure you get those withdrawn yet this year, and you can't go back retroactively to do those. So if you have not done that, call your financial advisor. If you're not even sure, call your financial advisor to make sure. Another topic here is And this oftentimes goes with tax planning at a little bit more advanced level, but would be harvesting some losses or capital gains. So in conjunction with your financial advisor, if you've got some losses available, especially maybe with this market dip here that has happened, it's now coming back, but utilizing some of those losses that are inside of your portfolio may make sense given where we stand. Now, I say that with a little bit of caution because where we kind of feel taxes are going, you may want to wait on that as well. But so if you've done a tax plan, we've talked about those strategies, it might be something that you're going to want to do, but make sure you give time because you don't want to just randomly do that on December 31st. Give yourself time to be thinking about doing harvesting of those capital gains or appreciated stocks. The last topic I'm going to bring here is the age-old year-end tax planning items, which would be buying equipment, paying invoices, deferring income. So if you're a business owner, these are some of the strategies that we've talked about. You should have a game plan. If we haven't met and talked about that, make sure we talk about it. Because interesting enough, this year for 2021, the right answer may not be to go buy some equipment. It may be to wait until next year. Even if you do want to buy equipment, you might not be able to because of the supply chain issues that are out there. But because of where taxes are going, we may have already made the conclusion that you're going to want to wait on some of these things. So just make sure that you actually put into action what we've already outlined in your tax plan. If you haven't done a tax plan, we need to be talking sooner than later on this. But there's again, if we're going to go purchase of equipment, make sure that you have it in place before the end of the year. If you're going to write some checks and actually pay some payables, make sure you do that before the end of the year. This is also the time that, normally you may want to push off receivables, but maybe this year you want to actually put in some receivables. And so make sure we deposit those things. Again, the normal typical type of tax planning items as a business owner, make sure you're following the plan that we've decided to do that you've got outlined. So you've got here another 3 weeks. Don't just default to what you've always done. Let's go back to what our tax plan was for this year and make sure that you follow through on that tax plan. There are a host of other items that we could be talking about here. I've highlighted just some of the key larger topics, if you will. The key here that you have is that we don't have that much time. We have 3 more weeks, if you will, but there's Christmas inside of there, there's New Year's, and people take off. Give yourself time, and if you haven't thought through these things, give us a call. We'll do what we can. Thanks for joining us. Have a great day, and we look forward to talking to you soon.